With that being said, the second reason can also be because they know that it's a influx of new investors who are inexperienced to the trends, inexperienced to how to invest. This is also low-hanging fruit for the experienced investors because they know that a lot of these catalysts that are being created on the internet and the Wall Street bets and in the Reddit groups, they're going to be able to make an absolute fortune because they can capitalize off of the hype and pump these stocks up and have people rush in and then literally just sweep from underneath them or rug pull them and make an absolute fortune. When you have this amount of new investors in the market, the amount of money you can make can literally become extremely easy. Welcome back, YouTube. So if you're watching this video, then you already know based on the title that this video is going to be about the transfer of wealth that was already in place, but is kind of being expedited now. And I made this post yesterday stating that the top 10% of the elite in the country now control over 89% of all the available stocks. And I wanted to dive a little deeper into that because I think it's important that we realize what's going on. When I first heard of this, I immediately thought about the reasons as to why I named my channel Disruption and why I called it the rise of the retail investor, because I saw this trend happening last year, and pretty much the movement of GameStop this year kind of sealed the deal as far as for the rush that's going to be in the market and for people taking control over their own financial futures. That honestly made me excited, and it's one of the reasons why I started diving even deeper this year with my videos. I started posting like my investments and my moves last year as well, but this year I doubled down on it just because I saw the amount of new investors that had an interest in the market, and as far as for learning different tactics to try and take control of their financial futures. So this made me excited. But I also named it Disruption because I know that this is a disruption to the status quo of how the markets were built and how they're supposed to work. So I'm going to read off some facts here, and then I'm going to give you my opinion as far as on what I think this means and where I think that we need to go. More people have flooded into the stock market in the last 24 months than any time in history. Robinhood became the #1 app on the App Store. This is ahead of Facebook, TikTok, Instagram, or any game. We're talking #1 app overall, a finance app. We've also had the highest inflation we've seen in the last 14 years since the '08 crash, and we've had a record amount of people that are not working. During the pandemic, the top 1% gained around 6.5 trillion, and the bottom 90% gained around 1.5 trillion. And the stocks that are already owned by the top 10% saw an average of around a 44% increase over the last 12 months. So if I take that information, and the first question that I had was, what a coincidence that now when you have the greatest influx of new retail investors come into the market, almost simultaneously, the elite increased their positions to the highest that it's ever been in history. And I thought, okay, what are the reasons for this? And let's dive into that. The first reason I can think of is going to be obviously control, because this is not the way that the stock market was designed to work. What was typically supposed to happen and what's been happening is you turn your money over to a professional or to a hedge fund, and they're going to manage your money for you and invest it, and you'll pretty much get your return and they get their management fee. So pretty much you'll have these hedge funds or these brokerage companies that are going to pile your money into indexes and different funds to reap gains, and of course they take their fee off of the top, and they pretty much do this on like a national basis. And it pretty much just in a way that can ensure that the market increases year over year, because you're going to have the S&P 500, so that's always going to be a staple company, a staple investment for most of these hedge funds. So you're going to have billions, if not trillions of dollars every year going into these same companies. So that pretty much guarantees that there's going to be a year over year return. But if you have a bunch of retail investors and that money stops flowing to Wall Street and people are investing on their own, there is no telling where that money is going to go. And I think that this is going to cause a lot of disruption here, because the mindset of a lot of the people now is not necessarily into to diversify or to invest for the long term. And I mentioned this in a number of other videos. Most people are chasing their moonshots or trying to hit like this one ball and knock it out of the park. and become overnight millionaires. With that being said, the second reason can also be because they know that it's a influx of new investors who are inexperienced to the trends, inexperienced to how to invest. This is also low-hanging fruit for the experienced investors, because they know that a lot of these catalysts that are being created on the internet and the Wall Street bets and in the Reddit groups, they're going to be able to make an absolute fortune because they can capitalize off of the hype and pump these stocks up and have people rush in and then literally just sweep from underneath them or rug pull them and make an absolute fortune. When you have this amount of new investors in the market, the amount of money you can make can literally become extremely easy. The top 1% have always controlled most of the wealth or the assets of around the world. But what we're seeing here is an aggressive pace that is now growing at an alarming rate to pretty much create the distance between not only just the poor and the rich, but also the middle class and the rich. That gap is also widening. So pretty much the rich are still accelerating, and the poor and the middle class are pretty much combining at this point. And this is also one of the reasons that we see a lot of reform being pushed as far as for in the markets with a lot of these short squeezes going on, and people pushing the SEC to kind of make sure there's more transparency in the market. Because when you look at the core of the stock market, it wasn't designed necessarily for the common man necessarily to win. It was designed to give them access to wealth, but as far as for the wealth and as far as for where the money was going and who had control over the money, you're pretty much turning it over. And I think that is a lot of the catalyst that's going on right now, because we see that a lot of people don't understand as far as what the stock market actually is. It's pretty much a glorified casino. And so when you pretty much buy into a stock, like there's a seller on the other side of that, and vice versa. So when you say, okay, if this stock is going to squeeze, for example, and I'm going to sell it at $6,000, there's going to have to be a buyer on the other end of that $6,000. Whether that's retail or the hedge fund, there's going to be a buyer. So with that being said, no matter when you get in, there's going to have to be a loser or someone who is not going to make money at that particular time. It's literally a giant machine to exchange wealth back and forth. The sooner we understand that, the better off we're going to be and be able to manage the market and also our risk. And this is why it's crucial for people to learn how to invest, learn how to put stop losses on, learn how to notice the trends, discipline themselves, because that's pretty much like one of the biggest portions of making money in the market. And you'll be able to limit the amount of losses that you can have and become proficient investors. Because until there's regulation, and as long as there's new money coming into the market and it's inexperienced and they're depending off of Reddit and these other websites and even YouTubers to get most of their information, and they don't have a way of validating it, they're going to get taken advantage of. So this is one of the things that's going to have to be pushed in the market just as well, and not just, oh, buy this stock. You need to know, why am I buying this stock? What's my exit plan on this stock? Why is this stock going up? What are the, how do I hedge myself against losses? These are going to be the questions you ask instead of a lot, because I know that it's become very popular. I say this a lot on YouTube. It's become very popular for people to push their stocks simply because, or their coins or their stocks simply because they have a position in them. But then you have to ask some of those deeper questions to determine whether or not you should invest in this coin or even continue listening to this person that's telling you to buy in. It's ultimately my recommendation, especially when we see these spikes like this. At this rate, I expect that number to be over 90% soon. And when you have something saying the 10% control 90%, and so the 90% of the people are going to have to, even if we all said, okay, oh my God, let's actually start investing in the market seriously, there's only 10% available. So we have to kind of take control of our financial future here and learn how to be a part of this market, because obviously, and it's been proven, this is one of the greatest vehicles for generating wealth. But never forget what the stock market actually is. It's also a transfer of wealth. And when you buy in, someone's getting out. So always remember that before you take positions. Always pay attention to where you're getting the information from. You'd be surprised how many of these hedge funds and these brokers own a lot of these finance magazines. You'd be surprised how deep this rabbit hole goes. You'll see that a lot of the information that is being pumped out to the masses, they're pretty much being controlled by the people on the other side. And we've seen this with larger hedge funds, even in the AMC situation, where they control every step and they have a presence in every position of the stock market, and even how the flow of stocks transfers hands all the way from the clearinghouse to the broker. they literally have positions in them. So they have eyes everywhere. And this is what what we're experiencing overall here, is how the market is engineered, not necessarily for, I don't want to say for you to lose, but it's engineered so that they can't lose. The market is a great opportunity to make a lot of money, but you're going to have to learn, and the biggest portion of that is going to be discipline. Like if you lack discipline, the market is literally going to exchange the amount of wealth that you have, and it's going to do so very quickly. The lack of discipline is what leads people to start chasing the hype and these new coins, or I took a loss in my last position, but this new coin or this new stock is going to go to the moon next week. Everybody's jumping into it. It's been going up 200%. I can get in, it's going to go up another 200% this week. And those people, of course, that were in, they take profits, and then you're down in the red again. So again, just learn how to flow the market, and so that you don't end up chasing it on the bad end of one of these stocks or cryptos. Thank you for watching. I hope you found value. Also, I am less than 100 subscribers from 36,000 subscribers on this channel. So if you have not got the opportunity yet, please consider subscribing so we can hit that 36,000 mark this week. I appreciate all of you. I have the links to my free ebook in the description section to get 2 free stocks at Webull. If you deposit any amount of $5 or more, valued up to $2,000, that you'll get, and 2 free stocks that are available. Please let me know in the comments as far as what you think about this new data coming out, as far as for the top 10% owning about 90% of all the stocks available. I appreciate all of you. Thank you. And until next time.